Jason, it's great to have you. You talk a bit about subscription revenue becoming a bigger piece of the pie, but overall, walk us through the thesis.
Well, thanks, Carl. Multifaceted thesis here. First off, you're absolutely right on the revenue diversification point. When we look at the percentage of revenue coming from non-retail crypto trading, that number was about 4% of total revenue in 2020. We forecast that goes to about 16% of total revenue in 2023. And there's a number of different initiatives that all fall under the general category of subscription and services revenue that we think are going to fuel that growth. One to watch in 2022 would be the emergence of Coinbase's new NFT marketplace, just as an example. And then second, we would also point to the underperformance of the stock over the last 2 or 3 months. We felt that that created a more attractive risk-reward setup and hence the upgrade to buy.
Now, you say that the catalyst could drive more interest among institutional investors. How likely is that given sort of the regulatory uncertainty, which you point out, and also just the sheer drop in the price of crypto?
So a couple of points on the institutional side. The first, in terms of what it means for Coinbase's business, if you look at the mix of trading volume that Coinbase is seeing on its platform, it has tilted decidedly in the favor of institutions already. In fact, they were just over 70% of Coinbase's trading volume last quarter. Now, naturally, the spreads that they earn on that volume are far lower than on the retail side, but nonetheless, you are seeing an increase in a level of interest among institutional investors in owning crypto as an asset. And then the other point we made in the note on the institutional side is simply in terms of the potential for institutional investors, as opposed to retail investors, buying stock in Coinbase. We believe that if there are increasing signs of revenue diversification and people are more interested in having exposure to the crypto economy, this is a great single stock way to play that theme and own a very strong management team and a large cap liquid name as well.
Jason, you point to the NFT platform as kind of diversification away from crypto trading. Here's my concern about NFTs. I believe in NFTs as sort of digital paperwork and an authentication method down the line, but I also have a feeling a lot of the NFT action we see in the market right now is trash, right? So in the future, if that platform is going to be any kind of a balancing or hedge against declining crypto volume, don't they have to do some kinds of deals with partners that have assets that are likely to be backed by NFTs in some way to avoid getting caught up in a potential collapse of some of the stuff that's getting NFT'd to death right now and won't be worth much in the future?
Yes, I think now the first thing I would say is you will hear more details on the NFT platform strategy as we go through 2022. They have started a wait list for consumers to sign up for this, but some of the details are still to be confirmed. We do think that, certainly partnerships are important here. And I think what you'll see evolve is kind of a what I'll call an NFT agnostic type model where Coinbase will be essentially agnostic as to which types of NFTs, consumers are interested in. They will want to cast a wide net. I think to your point, ultimately you'll see kind of the wheat separate from the chaff here. And there will be other areas of revenue diversification beyond NFTs as well. You've already seen some signs of traction as it relates to custodial services and staking and other types of services that will probably extend into the world of DeFi over time as well. So I think there'll be a multifaceted approach to revenue diversification. And that's going to take, that'll be measured certainly in years rather than quarters.